Hi, this is Mike Swanson of the Wall Street Window. I've got a real special guest. I've got David Morgan, who runs the website silver-investor.com and richesinresources.com. How you doing, David?
I'm doing great, Mike. Thanks.
Yeah, thanks for taking the time to talk with me, and I'm real glad you're able to do it because I consider you to be basically the world's foremost expert on silver investing. And I've been following these precious metals markets now for years, and we've been declining in silver and gold stocks basically since the fourth quarter of 2011. And I know once the decline ends, we're going to see another bull market. That's just the nature of these things. So to me, it's real important to figure out when is a good time to buy these stocks and silver and gold itself and so forth. So I was curious, what's your take on what's going on in the market now?
Well, I think we're at or near a bottom. In fact, we may be just slightly past a bottom. Time will tell. Bottom picking for me is more difficult than top picking. I've been more successful picking the major tops all the way up, or I should say intermediate tops. We haven't hit the major top yet, in my view. Bottom's a little trickier. I did pick a bottom back in May of last year for the metals and for the mining equities, basically. I said, I think this is it. And that bottom held for quite a while. It recently was breached to the downside, and I did it basis the mining indexes. You could use the XAU, the HUI, the GDX, GDXJ, any of them. Basically, we're showing the same type of formation, and it looked like a bottom. And again, it looked like it did hold for quite some time. I recently reached a new low. I think we've hit a new bottom in the mining equities. As far as the metals go, it's interesting. As I did that update for my members, so long ago, it's been many months now, I said that in a bull market, the equities usually lead, and I'm calling a bottom here for the mining equities, and the metals should bottom slightly after, and they did. And what's interesting, Mike, is the bottom in the metals, particularly silver, is still the bottom. In other words, the bottom in the equities has been breached, but the bottom for the metals has not been breached. The bottom for silver was around the 26 level, a little bit higher than that, but basically the 26 level. And it's stayed in that trading area for a while. So if you look at a chart and go back, you can see that the call so far on the metals is correct, but on the equities not. I don't belabor the point. What we've been doing is asking people to go ahead and buy into this weakness, and we've been working as hard or harder than ever trying to find value in the resource sector, and there's all kinds of value in the resource sector. There's many, many companies that are selling very much at a bargain discount price, and yet the sentiment is so bad that a lot of people own these shares are giving up, and people that might want to be in the sector are waiting for a lower low, and it may not come.
Yeah, I think you're right. Last year's in the summer in June, it was real interesting because the way I interpreted the market was that the global stock market, just forget about the United States, but had been in a bear market, and we saw bottoms in European markets, and every single market in Europe has gone up since then. The only one that hasn't is Cyprus, which has made a new low here, but all the others have gone up. And I thought gold and commodities had made a major bottom too, and we're going to go into bull markets also. And it's like you said, even though the gold stocks and the silver stocks have made new lows recently, the metals, silver and gold, have not. They've held their bottoms. So, if you look at that, then they haven't made new lows, and you shouldn't get all scared. But people are getting scared because these things the stocks have made new lows. But like you said, they've reached ridiculous valuations. Some of the gold companies, such as Newmont and Barrick, are paying 4% dividends, which I've never seen before. But I don't really know the situation, though, with the junior mining stocks. Is there a way to judge the valuations with them and tell if they're cheap or not?
Well, it depends on the junior. Obviously, in an exploration company, there's no way to know. But on a producer or soon-to-be producer, yeah, you can use the metrics that you use on a larger company and get a pretty good idea, what the true value of the company is. And those are the type of stocks that will appeal to us. Just for the record, we look at top tier, mid tier, and speculations. We're not like most newsletter writers in this, in the gold sector or the silver sector, which most of them are pretty much looking at these small, itty-bitty micro-cap companies. We look at a lot of them and don't like most of them. We do report on a few of them, and most of them would be considered, blue chips compared to what some of these guys write about. But anyway, yeah, you can find value there. But again, that's not where we spend. We probably spend more time there, but we don't spend a lot of money there. So what we do with the model portfolio is big money goes into big serious companies, medium money goes into mid-tier companies, and speculative money goes into speculative situations. We just put one out recently that had the highest grades of anything I've ever seen, Mike, and put it out and gave it to our readers, and we actually were able to gather a few new subscribers because I got a little excited about it, and still am. And the day that we put out the report to everybody's benefit and told about this company with these super high grades, the price is actually off about 6%. And, I don't move stocks really. In a real small company, any of us can. You can. David Scarica, any of us that write in this industry can. But it was sort of surprising because I knew there'd be some new buying, and it was off about 6%. Well, since that time, it's up about 30%.
Oh, wow.
Market, yeah. So, and I don't want to pat myself on the back too hard because, I'm too old and too wise to know it could fall off again. But it's a very value-oriented situation. I mean, the rock in this situation is just phenomenal. I mean, this is a situation of ounces per ton. I mean, this is just a very, very rare find for me and for our members. But moving on, I again think that it's testing everybody's metal, METTLE. It's something you got to have conviction on, and I think that it's sold out. I think we're washed out. I think that capitulation has been reached. I put out a new update for our members only on some of the stocks that we follow, some that we don't, using a mix of gold and silver companies and showing what the volume looks like and what these stocks chart patterns look like. And again, I'm never sure, but it certainly is indicating that we've probably hit the bottom, and now would be a good time to either add or not. And again, going back and trying to stay consistent because, my paid members as well as people that never, buy our subscription services, listen to these interviews, and I want to remain consistent in all levels. We've basically been buying all along. I mean, we've been finding these value situations and reasserting some of the ones that we've held for a long time, such as silver wheaton, for example. Silver was up, I think, 12% last year. Silver wheat was up 22% over the year. So, there are instances where the mining equities have outperformed the metal, but that's the exception, not the rule. I readily admit that. The mining equities are such a discount. It's almost mouth-watering if you have the conviction to stay in this market or have any capital available now.
Well, why do you think they've gotten so cheap? Do you got any idea?
Yeah, I've got an opinion. I mean, I wish I could prove some of this
right.
stuff. One is the hedge fund community's favorite trade seems to be long the metal and short the equities. That's one. The other, I think, is more philosophical, but it's one that goes again to the managed money community, whether it's a hedge fund, a pension fund, a money manager, or that type of situation. These people were restricted from buying anything but equities for a long, long time, or still are. In fact, let me repeat that. A lot of these people that manage money can only buy equities. But it wasn't until the last, decade or so where these commodities have been turned into securities. So you can buy silver by buying the SLV, for example, or you can buy gold by buying the GLD. So this has taken a lot of money. I mean, because this is management, this is big money, this is a large pool of capital that can go into gold and not into a gold mining company. So if you go back like 2 decades, that amount of pent-up demand for gold could only go into gold equities, not into an ETF. So it got taken a lot of money that would normally go into the mining sector out of the mining sector. There's less risk for a money manager. If he has a ETF that's only gold, it's going to fall the price of gold. He doesn't have to worry about a labor strike or a washout in the mine or a nationalization issue or any of these things that surround the mining industry. So I think that's really a big part of it. And again, the other part of it is that it's basically up to the public to be in the mining sector right now. The big money, not that there isn't, capital formation from large, equity firms. And, if you look at the mutual funds and some of the, John Hathaways, for example, are out there and are still in the sector. I'm not saying it doesn't exist. What I'm saying is that the money that does exist in these large ETFs would have been in the mining area in years past.
Yeah, it makes a lot of sense. And I I'm just thinking while you're talking, it'd be interesting to do a study. I don't know if anyone's done it, but just look at once the GLD started trading, see, if that's the time when the stock started to lag, more or less. It may be. I mean, it'd be interesting to check that. See if you can measure the impact that it has and prove what you're saying, because it does make a lot of sense. I mean, I can imagine like if someone says, well, you should put 10% of your portfolio in gold, and well, there's an easy way to do it. Buy GLD instead of the stocks. So, but I think the stocks are so cheap that at some point they're going to really take off and surprise everybody. Just wait.
Yeah, I'll chime in. I agree with that. I think that the gold stocks really are acting more like gold, and let me explain that. If you go back and look at the research, and this is easily provable if you do any, Googling on the subject, but gold is the most negatively correlated asset to the stock market. So stock market up, gold down, gold up, stock market down. But yet in the last, couple of years or so, basically it's the gold stocks and silver stocks have been the most negatively correlated asset to the stock market. You see the S&P, and the DJI making new highs in nominal terms, I have to add. And these mining equities are making, not ultimate lows, because the lows were back in the early 2000s, but I mean recent lows, mean the last few years. And it's just amazing. So when this turns around, and again, I think it could be very soon, I think you're going to see a very dramatic move in these metals. Not initially, maybe. It takes time to build a base, but we'll see. I mean, these are very small companies for the most part. I mean, there are billion-dollar companies in the mining sector, of course, but there's a lot of, mid-tiers that are barely $1 billion or, $500 million, which sounds like a lot of money for an individual, but for a company base, it's really not much of a market cap. So you're going to see any new money coming into these in a big way. And the last thing is, that I'll add is that there will be the momentum players. I mean, there's so many software programs out there now and so many people that basically do what their computer tells them to do. That once these kind of equities, and it's any equity really, starts to move, it comes on a radar screen of all of these, I'll call them stock market traders. And they'll see, oh my God, Newmont just made a, X% gain today on huge volume. It's a breakout. Buy it. And that will add to it. So there's this kind of follow the leader type of mentality into whatever sector is moving at the time. If you couple that with some kind of a currency problem that we're, always in the midst of, I mean, there's, we don't have to visit the Cyprus thing, but there's all kinds of things going on in the global economy that absolutely demands anyone paying attention to be exposed to the precious metals at some level.
Well, before we wrap up, I want to ask you one thing real quick, and I don't know if the question even means anything or what, but, I look at the charts of these stocks, and if you look at the big cap silver stocks like Silver Wheat and Pan American Silver and so forth, Hecla, they seem to have better charts than the gold stocks. They seem to be performing better on a relative basis over the past couple of weeks. It makes me wonder, if once the miners turn around, if the silver stocks aren't going to outperform the gold stocks. If you think that's the case.
Well, it is. Again, if you do enough research, you can prove it. It's just not my opinion. I'll state it as opinion. Yeah. But first of all, to find a true silver stock is a rare thing. I'm not saying silver is rarer than gold, but what I am saying is that most silver is mined as a byproduct. So your RTZs, your BHPs, your huge conglomerates mine a great deal of silver, but to the bottom line, it has hardly any effect whatsoever. But yet they produce a lot because of all their copper, lead, and zinc mining. So to find an equity that's very leveraged to silver, like say First Majestic, that's about 90%, which is about the highest one out there, is a rare event. There aren't many. There's no such thing as a pure silver mine, and to be close to a pure silver mine is rare. So that's one. The other thing is silver has a leverage factor that's even greater than gold because it's a smaller market. So, for example, Mike, at the top of the market last time, a good, powerful, strong company like a Newmont as an example, would have a PE at the top of like 35 to 1, and a good strong silver company would have like a 50 to 1 PE.
Wow.
So I'm trying to compare apples to apples. I'm not, gold and silver are different, but they are precious metals. So at the top of the market, multiple or market cap structure was higher for silver stock than a gold stock. And what that means is that people are willing to spend more or pay up for a silver equity than they are a gold equity. And again, that makes sense because there aren't very many of them. And silver sort of has this, and I don't like to say it, but it's true, and I've said it before, it sort of has more of a greed factor to it than gold. This, again, is my opinion. But a lot of the little guys that come in late into the market say, oh my goodness, gold's at 3,000. Darn, I wish I would have got in. My wife wouldn't let me, or whatever their excuse is. And they see silver, well, silver's still $100. I'm going to get in. And they'll jump in. And then, of course, they'll push the price even higher because buying pressure, of course, moves anything up. So, and one of my jobs will be to try and, get out near the top. And, that I think is years off. I think we're looking probably 2016 or so. I think we're 3 or 4 years out for that. But nonetheless, I think, again, that we're near bottom here. And it's something that I'm glad you're doing this interview. It's something that I think, it's a service to people. I mean, this situation in Cyprus is pretty scary. We'll fall back basically and just say, well, the last month's Morgan report, I quoted Eric Sprott from the Silver Summit here last October saying that, you might not think about having your money in the bank as a risky investment, but I think it is a risky investment, if that's the paraphrase of his quote. And no longer did I write that in the last issue, and then here we have this thing with Cyprus where your money in the bank was basically even but safe. And again, I'm not trying to, push the fear card. I don't like pushing the fear card, but I do want to push the reality card, and that is the reality. How safe is your money? You got this money, gold and silver. I'm talking about the coins and the metal itself. That's withstood every, dictatorship, every change of, leader, every war, everything throughout recorded history. I mean, this is money that's never failed versus any paper currency on the planet that eventually has. And you tell me what the most conservative investment is. I always get this, and it really is a pet peeve of mine, Mike, where, well, that's risky. I'm thinking to myself, is it? Silver's in the Bible uses money, and from that time till now, it's had value. It's never failed. But all these other currencies have failed. So who's the most conservative here? Is it me? People that are silver nuts or gold nuts or precious metals heads or whatever, word you want to put on us. Or is it you people out there that are paper bugs that think that, the government knows best? I don't know. I've been so studied in this subject for so long that maybe I'm starting to sound like a cranky old man. But, the reality is that these metals haven't failed, and obviously this government fiat system always has had problems.
Well, you just used a word I never heard before, and I'm going to try to remember it because it's great. Paper bugs. I like that. It's true. As we wrap up, could you tell everyone what you provide or where to go for more information?
You bet. Do a lot for free. If you just go to silver-investor.com and get our free email list. It's a very strong list, and it's about a once-a-week mailing. Sometimes we mail during the week. The Saturday issue is basically a summary of all the interviews we do during the week. And then there's a YouTube channel, Silver Guru, and there's a Twitter feed that's Silver Guru 22. All that's for free. If you're really curious about this market and want to learn more about money, metals, and mining, you can try the Morgan Report. There's a 6-month subscription that's pretty reasonably priced, and a couple upgraded services that you can look at on the website. On top of that, we have a new site. It's called Riches in Resources. That's richesinresources.com, all one word. This is from some analysts that work with me. And basically, this is an area where you can just go and buy a report. So, for example, let's say you're interested in new gold. You could buy the report on new gold, or silver wheat, and you could buy a report. And these are standalone reports. These are basically objective analysis. My opinion isn't in there. This is just a report on a company. So let's say that you're thinking of buying Alexa Resources, for example. I mean, for $49, you can buy this report, read objective analysis of it, and make a determination whether you want to buy it. Or perhaps you already own that company or thinking about should you hold it or should you sell it. So this is something that I've been kind of toying with for quite some time, and again, kept some of my analytical help off on it. It hasn't gotten much publicity yet, Mike, so thank you for letting me talk about it. But I thought this is something, again, that's been asked for. It's like, well, I'd like to just buy a report. So, of course, we can't get them all, but there is a box on the website that you can say, hey, how about XYZ Mining? I'll just let everybody know, XYZ Mining is some startup exploration company with a small micro cap. We're probably not going to be able to do a report on that because there really isn't any meat. There isn't any real known facts that we can use to do a good report on it. But anything that you probably heard on like King World News or many of the other commentaries out there on the gold and silver equities or gold and silver itself, those type of situations, you probably find a lot of those on this website.
Well, I'm going to go check it out right now and dig around and see what I want to take a look at more. Well, thanks for taking the time to talk to me and everyone else, and definitely do another interview in the future.
Thank you, Mike. My pleasure.